I recently added this stock in my portfolio. XP is basically a brokerage service. They offer a bunch of services from insurances to a normal brokerage platform that you would expect where you can buy stocks, and it's basically disrupting the Brazilian space fair. The stock has not performed well since IPO. It has climbed back after its weakness in 2022, but it is back down to $13 a share. I'm adding heavily here. Basically, all my money I'm putting in my portfolio currently goes to XP, and I want to tell you today why. When it comes to client assets, they're heavily growing. Some acquisitions here and there, but this is mostly just for organic growth. It's a new company, they don't need to do big acquisitions to grow, which is something I also very much like. And with this growth in client assets, of course, also comes a gigantic growth in revenue. Currently, most of the money comes from retail, because retail is where they have their biggest market share yet. And that is because how easy it was for them to disrupt the space. Basically, the market in Brazil had a few big banks, which were very consumer unfriendly, high margins, high fees. They offered their services at very affordable rates. Meanwhile, they also had education services going on, they still do, about investments. And this is kind of where their thesis here lies. They acquire a lot of customers because of a great product. They also offer to educate people who have never even looked at investments before. And if you get those people into the retail segment, they stay as loyal customers because they don't have a reason to change. You offer them a great service at a very reasonable price. And then of course you can sell them other stuff. While they might get only fixed income stuff, maybe some stocks, you can also sell them insurances, retirement plans, credit cards. While their main business is kind of slowed down right now because of Brazilian interest rates, their cross-sell products are still fastly growing. And I believe they can eventually bring a huge amount of revenue also to the company, without them having to even grow the underlying brokerage business. Yes, revenue growth has kind of stalled lately. They had huge growth where they returned to 30% revenue growth, but it has kind of stalled off, because this is still a brokerage company mostly. And you can see, since 2016, interest rates in Brazil have gone down and down and down and down. And in 2021, they went fastly up, like everywhere in the world. Then they came massively down again, and now the market expected them to get down, but instead they're going up. Stocks perform worse when interest rates go up, and this in Brazil is the biggest case, because they're going back into a high interest rate environment. They're not thinking about cutting, instead they're thinking about raising. So while you might have some short-term problems here, where revenue growth kind of stalls out, overall, revenue is fastly rising. Yes, they have periods where because of interest rates and the macro environment, they kind of stall a bit, they don't grow the underlying platform as much. Meanwhile, they're still acquiring customers. They're still growing the underlying business. I like revenue growth, but does this give me profits? Yes, earnings per share, diluted, are even fastly rising. They're still growing at 32% CAGR ever since IPO. That is during the last few years where they had a really bad interest environment in Brazil. Because like I said, this is a Brazilian brokerage. Currently, it's only in Brazil. They have plans to eventually expand, but currently they're only in Brazil. And stock investors from countries, no matter where you are, they're always gonna have more of their money invested in their home country. That is just a scientific fact. Some people say it because people think they're more familiar with these companies, maybe they just know the names, so they invest in it, but anyway, they have more stocks in Brazilian companies, and the Brazilian stock exchange had not done well. So obviously, the brokerage will also not do as well. But it's still growing clients, still growing underlying customer assets, and cross-selling products. So currently, I just see this as an ability to buy the stock at a lower price while the core business is still performing well, and once the macro goes back, they're gonna have higher growth. They're still growing right now, just not as fast. They still grew at 18% over the last 12 months. That is not nothing, that is a very high growth. Other companies would kill for that growth. That dividend is wrong. They're paying a 60-cent dividend. The dividend is around 5 to 6% depending on the day you look at, not 10%. But it's still a very nice dividend. The company has bought back shares before, then they issued some shares due to an acquisition, now they're going back to buying some shares. Those are not huge share buyback programs, but it's great. They just issued a new $160 million share buyback program on a market cap of $7.2 billion. That is not nothing, it's not huge, but I like to see that they return cash to shareholders. Meanwhile, tangible book value per share is also fastly growing. Yes, you gotta remember this is Brazilian reals, this is not 40 USD, this is 35 reals. That is around $6 per share, so it's trading at around 2.2 book value, which, yes, is not the lowest, but it is a fastly growing business, so I think it deserves to trade at a premium. And currently the growth rates are also kind of down, because while retail money has grown fastly, institutional and corporate stuff has gone down, like I said, because of the high interest rates. But once these interest rates go down or normalize, I expect this to go back into growth mode. Meanwhile, retail still grows at 10%. So overall, I think this is just a stock that has a lot of potential. Limited downside, I don't really see them being disrupted currently. They just have a great business model. They're building a very loyal customer base, and the stock is trading at a 9 PE. Now, what is for one risk is that they basically earn all the money in Brazilian reals. So if a Brazilian real has a hard time, the earnings in USD are going to be hit. But I think at this valuation, that is a very low downside versus to a very high reward. Now, when it comes to the valuation, now currently they make $1.3 in earnings per share. That depends a bit on when you look at the days. It might be higher, sometimes lower, because it's in Brazilian reals. But let's assume they're gonna only grow at 10% for the next 10 years. It's basically what the retail is currently growing at in very bad times. Plus, they're gonna do buybacks, especially at these low levels. So revenue doesn't even need to grow at 10%. It needs to maybe grow at 8 to 9% plus for buybacks. Then 50% payout ratio, little deduction due to taxes. We would come to $23.58 per share. Currently at around $13, depends when you look. That's an 81% discount. That is a fantastic return. What if it only grows at 8% for the next 10 years? Which is basically retail continues to decelerate, no buybacks, and just the dividend. Even then, $15 a share, we still make a 10% return. Now, what if it goes back to normal times? Once interest rates stabilize or go down, they're gonna grow at 20% for the next 5 years and 50% afterwards. Plus, the stock is gonna get a 20 multiple because it's a fantastic company, it deserves a better multiple. $52 a share. So I think this is a stock with huge upside, with very limited downside. I don't think it's gonna be disrupted, but only risk to it is the Brazilian economy. And I think overall Brazilian economy in the long term is going to do fine. It's not going to be stellar like China or India, but it's going to do fine. So I am heavily adding to the stock. I don't see any reason why this is not going to become my number one position if it stays at these levels. Now, of course, this will take a bit of time to reach that level. It's still a very new position. But I'm heavily adding to the stock. What do you think about it? Write it down. Have a good day.